Joining me right now is Mahoney Asset Management CEO Ken Mahoney. Also joining the conversation all morning long this morning is pollster and the president of Meslansky and Partners. Lee Carter is here. The director of strategy of Optimal Capital, Francis Newton-Stacy, joining us as well. Ladies, good to see you. Ken, welcome to the conversation. Thank you so much for being here. Your thoughts on all this volatility this week? Big sell-off on Monday, big rally on Tuesday. Looks like we're going to continue that rally this morning.
I guess like a little bungee jumping, right, Maria? So, first of all, I think we've been kind of in a stealth. We've been kind of in a stealth correction for some time now. I mean, the major averages, the Dow, S&P, Nasdaq, all hovering at all-time record highs. Yet when you start getting behind it, you got bad breath. Some internals not that great. Small cap getting hit hard. Biotech. Last week it was utilities leading. It's kind of like the generals, if you think about generals and troops. The generals being Apple and Amazon fighting the battle, doing very well, overweighted, of course, in the S&P 500, and the troops are running this way. Hey, by the way, that's normal. It happens sometimes when leadership continues and the deterioration underneath it. What I found surprising after Monday's, drubbing, so to speak, is on like Twitter land when everybody's going crazy about a 2% drop. I mean, what I find interesting is that most people don't recognize here we are through the end of July, and we haven't had a significant correction. Typically, each year, Maria, we could have 2, 3, 10% corrections in a given year. So we really had low volatility. But to see everybody freak out over Monday's, decline of 2% is pretty funny, to tell you the truth.
Yeah, but I mean, is this indicative of expectations of growth coming down? I mean, let's, for example, take a look at the earnings season. We've got United Airlines and Chipotle both topping expectations yesterday, but Netflix falling short. Certainly on the subscriber growth, Netflix adding 1.5 million new subscribers in the second quarter. That was the smallest increase in subscribers since at least 2013. Now, Ken, this could be just a Netflix story. That's fine. But what about the broader story of economic growth and this volatility that we've seen in the market? Is that because expectations are coming in with regard to growth in the second half?
Right. Or look, in the last couple of weeks, the variant raising its ugly head. You can look at a chart, variant going higher and expectations of growth going lower. So it's totally correlated. I mean, what we found interesting on Monday is actually the VIX, the volatility index that we use in our models. We overweight the VIX, the volatility index. That kind of, that actually kind of broke a trend line and is heading not in the right direction for investors. So we're watching it very closely. In fact, actually, the VIX continues to go up. We'll be taking chips off the table. But as far as different stocks, let's say the FANG stock, Facebook, Apple, Amazon, Netflix, and Google. Netflix, of those kind of FANG stocks, were never really the strongest. They actually pulled out a little gain here, looks like this morning. Is it or down a little bit? Because they're going into gaming. But I expect the other ones, the pillars, the Microsofts, the larger ones, going to have great numbers and pretty good guidance. And Maria, I think that's what we're going to be looking at when we go through the earnings reports. The report's going to end June 30th, the second quarter. That's rearview mirror now. I think looking forward to see what they say about guidance is going to tell us which stocks are going to move higher and which ones are going to get hurt.
Yeah, I mean, are you hearing anything from guidance in terms of the second half of the year, Ken? I mean, this morning we're waiting on earnings from Johnson & Johnson, Coca-Cola, and Verizon. We'll see what these three companies say about the second half and into 2022. But have you heard anything from these managements of the companies reporting earnings in terms of their expectations for the second half and 2022 as well in terms of growth?
Right. So I think most are going to give some pretty good guidance. They should have decent visibility. But again, you're learning in most of these CFO calls that do these earnings numbers and so forth. They're really worried about inflation. You keep on hearing that. I think about 75% of the conference calls after earnings so far, again, early in the earnings cycle so far, are talking about inflation. So I think most those who are managing, the C-suite managers, so to speak, are really concerned about rising raw materials, consumer prices and so forth. So I think that's, and yet at the same time, Maria, if this variant's coming back or this Delta or this boomerang, hideous disease is boomeranging back, it actually may keep the Fed off sooner. In fact, of all the things the Fed have said in the last couple of months, I think the most accurate thing they've said is that we're not behind this variant yet. We're not behind this virus yet, because all of us really kind of want to move on. That's 2020. And yet, actually, they said something very true. So I think we have this kind of sea change here. Here, we have inflation, yet we're going to be pushing off pushing off the variant and so forth. So it can't be both ways. Either it's going to be inflation or things are going to moderate because of the variant.
All right, we will leave it there. Ken, it's good to see you this morning. Thanks so much.
Great to see you as well. Thanks.